What up, everybody? Welcome to another week at BTSMC, and we're gonna go over the watch list for the week of August 25th. Now, I think we got some interesting price action coming up this upcoming week, heading into September. Like September starts next week, and so we'll talk about what to expect in September. I got something I want to show y'all, but before we get into next week and this upcoming, all that stuff, let's talk about last week. Why? Because we got to take the gems from last week. You can't just move on without taking gems from it. Like, come on, let's get it. So boom, first and foremost, I mean, looking at this as futures just opened up, you can see we getting like a bit of a red candle here on the 4 hour. NASDAQ is dropping a little bit, but I don't personally trade these hours, so I'm not really interested. But regardless, let's lock in and get some gems. So going back to last week, we were pretty much in a range. And just to speak on that real quick, y'all, August is historically the worst month to trade. And I don't mean worst as in red. I mean worst as in like lowest volume. It's a very, no one's in the market. Like everybody on vacation. I literally just came back from vacation just some days ago. Like it's not a good time to trade. And so it's best to just honestly either stay cash or you have to drop your sizing or /A and take like conservative targets as your profit targets. Like don't be trying to swing for the fences in August. I know traders who literally take August off. And going back to my very first August trading, that was indeed my worst month that whole year. Oh my gosh, bro. I'll never forget that August. Like I'm every day I sit at the computer and lose money faithfully, like every day just looking at this like, wow, I just pissing my money away. Like, yo, this is crazy. Like, I suck. Like, but then September was a lot better for me. And I was like, man, like, dang, this feels so much different than August felt. And it's no joke. It was just a whole lot of chop in August. So you got to be careful trading any August. And my second August was very similar. Like, it was my second worst month that year. But this August here that I'm dealing with, I'm doing pretty fun, and it's not my best month all year, but it's also not my worst month all year. It's just kind of a decent, solid month going on right now, and I think that's because I've adjusted. I've also just gotten a lot better as a trader, of course, too. But still, just set expectations, different for August than other months. I would say, I'm looking for August to be over as well. So, regardless. You can see it's like pretty rangy. It's not really the greatest PA that we've been dealing with lately, but coming into, I'm gonna go over like Friday's play. Like there's a lot I can say about a lot of different days, but I try to choose one thing to hone in on. And I know I talked about this a little bit in my master class yesterday, but I'm gonna go over the same sequence because I think people need help with like understanding what I mean by like confirmation and everything. And so first and foremost, we have a bearish order block here on the 4 hour. Now, one can also justify this as a bullish order block, and this is tough when you're in between two valid PD arrays. As you notice, we actually, it went lower than I would want it to on a bullish OB, but like very technically, price is still reacting to this bullish OB, and you can see bodies are holding the 50% of it as well, right? So if I were to draw this, you'll see that bodies are still holding 50%, and it's currently still working technically, but we're in between this bullish one that I just highlighted and this bearish one right here. I pray to God my trading view don't lag. My mentees, that's an inside joke. I pray to God my trading view don't lag today, bro. I don't got time for that. So the laptop phone a little hot. Oh man, y'all know how it go. But anywho, so here we are. We got the bearish OB here, and y'all don't have to say it in the chat. Please don't say it in the chat or nothing. But we're getting the reaction on the part of the order block that we would want to. So first and foremost, when you get like certain knowledge on OBs, you'll start learning where exactly you want the reaction to occur on the order block. Like, I know this may look like a big area, like, yo, I could just like enter the play as soon as you touch the order block when my stop loss is 3 trillion points away. And it's like, no, first and foremost, there's a section of the order block on any given order block that I call valid, that you're expecting the reaction to occur. And that's exactly what happened here on this 4 hour OB. So now let's go to, I pressed the wrong time frame. Let's go to the 15-minute. So why did I go to the 15-minute? Anybody who remembers the confirmation time frames, I talked to y'all about how An order block is most likely not going to work, or a fair value gap is not going to work, or any type of PD array, any type of point of interest will not work unless the confirmation time frame starts producing fair value gaps after touching it. It's just very unlikely to see, like, let's say a 4-hour order block that's valid get touched and the 15-minute doesn't make a fair value gap shortly after. Bro, I don't see a fair value gap on a 15-minute. Look closer, look closer, look closer. Look, I'm talking about this. I'm talking about that. Come on, man. That's what I'm talking about. That one right there. All right. And so that, yes, after touching the 4-hour area, you notice the 15-minute made a bearish fair value gap. Beautiful. That's what we call a SIBI. Okay. Now, before I even get there, let's understand something. If you have a 4-hour order block, then a 4-hour bearish order block, the target is the 4-hour swing low, sell side liquidity. If you have a 4-hour bullish order block, it will be, the target is technically supposed to be the 4-hour swing high, or I would say, let's just call it the previous highs. And when it's bearish, let's call it the previous lows. All right. So let's look at this 4-hour for a second. Let's look at this 4-hour for a second. At this point, and let me do this so it's easier to visualize what really happened in real life. This is what price looked like as we're heading into this play. So what truly happened was price ended up coming up here, touching the OB exactly where we want to reject from. We didn't want it coming to the halfway mark. We didn't want it coming to the upper half of it. No, we wanted the reaction exactly where it reacted at. If it would have came, I'm gonna tell you this right now, y'all. If the order block would have come to the halfway mark, I would not believe in it and I would start getting bullish. So I'm making it clear that with certain information, you will learn where on the order block you're expecting a reaction from. So don't be tripping off the fact that it's a big rectangle. Doesn't matter. We're not tripping off of this big rectangle because there's only a certain spot we're looking for. But yes, we got to highlight the whole thing because guess what? It's still, the whole thing is still by definition an order block. By the official definition, the whole thing is an order block. So therefore, I need to watch it. My expectations are exactly where it was. Regardless, what happened was price comes up, reacts. Where's the target? The previous lows. The target is the previous lows. Now, why did I choose the 4-hour lowest body as the spot for my take profit during this play? And this is the play that I already have screenshotted. Y'all have the screenshot in my channel. You guys can see what I did there. Why did I choose this as the target? The reason it's the target is because we're in a range in August. So you see how everything comes back. Like I told you about August's price action. I see what the whole week looked like. And guess what? We're in between a bullish PD array and a bearish PD array in a range. Like, I'm not about to get greedy. I'm not doing none of that. So I'm eyeing the heck out of when price gets to that 4-hour lowest body. I'm looking for changes, not changes of character. I'm not talking about market structure. I'm looking for sentiment shifts on the lowest of time frames so I can get out my play early, and I'll get to that part. But I want to let you guys at least know, what is this yellow line? Why is this my take profit area? Because it is the lowest body on the 4-hour previous lows. Okay. And for those who are new here, because I always have new students like every week, like, what is this lowest body thing? Well, a lot of people teach you that liquidity is simply, you know, the swing low. And that's not wrong. That's true. We love to, of course, that's liquidity. But in institutional order flow, often, especially in a range, bro, especially in a range, it's very likely that they will just target the lowest body at a swing point. It doesn't necessarily have to take you to the lowest part of the wick. So a lot of people like might set like a in this case a sell limit, a buy limit, which is their take profit. They may set like a limit order here, and they're never gonna get filled. Like, so you made a great play, like you caught it from the top and you waiting on the lowest wick and you never got a chance to leave your play, and now you turn the winning play to a loss. And so because you didn't understand, like in institutional order flow, there's no requirement to get to the lowest part of the wick. Sometimes we just often, and the most conservative thing to target is the lowest body at a swing low. And for bullishness, you'll be targeting the highest body at a swing high. All right. So that's for one. So I'm here targeting the lowest body on the 4. So now let's get back to the play. So, you know, all right, that's the 4. Let's go to the 15, and let's get to this part where we want to see the 15-minute make a bearish fair value gap after touching this. Now, let me talk to y'all specifically about this scenario. In this scenario, by the time the 15-minute makes a bearish fair value gap, we're so close to the target that it's tough. So I didn't necessarily have to wait on this. I could have like, you know, used maybe the 5-minute. Look at the 5-minute. Once it made its bearish fair value gap, you know, it made a pretty big drop. I could have used other time frames to get in and stuff like that. I'm just telling y'all that that's not what I did in this scenario. I initially wasn't looking to go short for real. I'm watching. I'm in like cash mode basically. I'm watching. Why? Because as I told you, we're in between a bullish order block and a bearish order block. So when you're in between valid POIs, valid PD arrays, first of all, that's low probability conditions. And second of all, typically that's where you'll see ranges happen. And that's where you can mess your account up if you're trading in between both valid points of interest. So, and that's because we're in a range. Once again, it's also August, so you're being careful. So what did I do? I said, I'm only gonna take this play if price screams at me that it's valid. So when I see a 15-minute fair value gap actually form, I'm officially interested in this area. Like, I'm officially interested in this area because it's like, all right, not only is this here, which shows you that this 4-hour bearish order block is working because it produced a 15-minute bearish fair value gap, but we didn't actually touch the target. And because I understand objectives, it's very, 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 very unlikely that we're gonna not touch that 4-hour lowest body. So this little rally here, I don't really believe in it for real. So now that we got the 15-minute to, you know, make us our bearish fair value gap, now what am I gonna enter? As soon as we touch the gray area, am I gonna enter and just go short? And with a stop loss above here? No. And I think that's really why I'm going over this, because I think there's a big misconception going on. When y'all heard me like introduce these confirmation time frames, a lot of people think that, well, if it's a 4-hour play, he's entering based on the 15-minute. And I'm trying to tell y'all, no. I never enter on the 15-minute. I never enter on the hourly. I never enter on the 4-hour. I never enter on the daily. I don't enter on the 5. I don't enter on the 3-minute. I don't enter on those time frames. I only enter on the 1-minute or the 15-second at all times. And so how do we do that? Well, all right, once again, we are interested in this area because we expect price to come to the yellow line, meaning we have a destination. Any move to the upside is not believable. All of a sudden, it's just not believable. Bet. So what I'm doing, I'm always scanning time frames. So first and foremost, this is something I can't talk about here, right? But I'm interested in price coming to this yellow line because that's the phase 2 concept. I told y'all, I am not just an SMC trader. I trade 2 different strategies at the same time in conjunction. So when you combine them, it's like, it's freaking golden. I ain't gonna lie. And that's for my grad school students. So first and foremost, I'm very interested in price touching this yellow line specifically. So I don't really believe in anything until we at least touch this. But that's a side note. Let's just keep it SMC though, because what I do talk about publicly is SMC. So let's just keep it SMC for a second. Just know this yellow line, the midline thing that I'm talking about, that's what we interested in. All right, so boom. Where are we at? 15-minute. All right, so you have a 15-minute point of interest. All of a sudden, it went from a 4-hour point of interest to a 15-minute point of interest. Now, guess what? This is how you scale the confirmation time frames, and this is what I've been trying to get to. This is how you scale the confirmation time frame. 15-minute point of interest. What is the confirmation time frame for a 15-minute point of interest? Can y'all say it in the chat? Because somebody put me on. If I got a 15-minute point of interest, thank you, Janae. Thank you. Off the rip, Janae blessed us. She told us, yo, the 1 minute. Brandy said it, the 1 minute. So let's get it. We look at the 1 minute when price gets to this area, and this the time frame we watching. All right, so what are we looking for in this area for real? You're looking for a 1 minute fair value gap to the downside. because this is the 15-minute bearish fair value gap. So let's get something clear here. How the heck do we even get to this gray area without entering into an uptrend first? Right? You're not gonna enter that gray area without becoming an uptrend first. So now that we're in an uptrend on a 1 minute, my confirmation is when the 1 minute turns back around. That's what I'm looking for. So boom, what I need the 1 minute to do is I need the 1 minute to make a bearish fair value gap. And then now I'm getting convinced because it's very unlikely that the 1 minute is gonna make a bearish fair value gap after touching a 15-minute bearish fair value gap, unless the 15-minute bearish fair value gap is valid. If it's valid, you're gonna see the 1 minute react in this way. If it's not valid, the 1 minute will not react to it. So that's why I don't just simply go off of, there's a fair value gap here, I'm getting in. There's an order block here, I'm getting in. There's a blah, 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 I'm getting in. No, I never do. I'm always going to wait for price to tell me it's valid. That's what I do. And so, but that's what keeps my risk to reward so lavish, because now all of a sudden, not only a 4-hour area or a 15-minute area, is what my risk is based on. But no, my risk is really based on a 1 minute area. And to be honest, it's really based on a 15-second area when you really get to the nitty gritty of it. But I'll keep going and show y'all what I'm talking about. So boom, at this point, because we haven't made like a bearish fair value gap on the 1 minute, I have no reason to even be thinking bearishly at all. Like I have no reason to be thinking bearishly. So I'm not in the play. Please don't lag. Come on. Let's get there. All right. Right. So I have no reason to go short yet. Guess what? I'm not short. So now it's like price comes above the fair value gap, and you probably are nervous at this point. Oh man, that 15-minute joint didn't work. Well, first and foremost, you didn't lose money because you never got in. So you're good. That's one point. The second point is, let's remember. Can somebody write in the chat, in order for a fair value gap to be invalidated, do we need wicks or do we need bodies to close above it? Is it wicks or bodies? Thank you. iPhone got it. Randy got it. Joy got it. It's bodies. So if I'm looking at, I got another question for y'all. If I'm looking at a 15-minute, let me highlight this because I feel like people lose it. Hold up, man. 15-minute. I don't even use the word. I don't like the phrase bearish fair value gap, but I'm going to write it here. I use SIBIs and BISIs, but whatever. I'm going to go ahead and write bearish fair value gap because it's more globally understood, I guess. So this is a 15-minute bearish fair value gap right here, right? So I got another question for y'all. Am I looking at 1 minute bodies or am I looking at 15-minute bodies in order to validate this? It's a 15-minute bearish fair value gap. So do I need to see 15-minute bodies respected or do I need to see 1 minute bodies respected? I'm seeing people say 1 minute, seeing a lot of 1 minutes in here. Whole lot of 1 minutes. Now the 15s is pouring in. Oh man, 15 game coming in strong. Oh Lord, 15 game came in strong right now. I'm gonna tell y'all right now. It doesn't even matter, y'all. And it's not about it being on a chart. I'm gonna just give you the answer. So first and foremost, right? The answer is 15 minutes. So, and that's why I'm so glad we're going over this to cover these misconceptions. Listen, y'all. This gray area. Get it? Gray area. Haha. This area right here is a 15-minute area. 15-minute fair value gap. So the candles that I need to respect it need to be 15-minute candles. I don't care about a 1 minute candle closing outside of it. I don't care about a 5-minute candle. I don't care about a 14-minute candle closing outside of it. I only care about 15-minute candles closing outside of a 15-minute fair value gap. That's it. Don't get it twisted. So as you can see here, the 15-minute candles respected the heck out of this fair value gap. Look where the bodies closed at. Or look at the bodies closing. Guys, the lag is killing me, y'all. I'm trying to push through it. Look at the bodies closing under the 50% of a bearish fair value gap. Goodness gracious, we love that. Like, we absolutely love that, don't we? Come on now. All right, so that means it's really definitely working out for us. These are what we would call signatures. These are things we like to see that's telling us that you're on the correct side. If you have bodies closing on the higher side of this in this context, that's not a good sign. And hopefully the mentees could see another signature when it comes to these lows for real, right? And then the expectations here. You know what I mean? Something similar to what we talked about earlier regarding the chart debate, right? So it's the same concept, mentees, same concept. Yeah, it's just this is just a bearish version of it, what we was talking about. But anywho, let's go back. So now that you saw the 1 minute close above it, this giant, like, who cares? We're not tripping on that. So anywho, we come right back into the fair value gap on the 1 minute time frame. And okay, oh, now we getting a little energy. This is not, if I was bullish, I'll be like nervous right now. Like, dang, this looks like an AMD. What is an AMD? It's accumulation, right? They manipulate it to the upside, and then now we might distribute to the downside. Dang. But me, I love that. Personally, I love that. I ain't gonna lie. That for me, I'm happy with what I see here. I know a bullish person is kind of sick right now though. But that's what I want to see, because if I was bullish, I would be wondering why we can't, after this big green candle, leaving the range, I'll be wondering why we're returning to the range like this immediately. That's not a good sign. And so boom, that just occurred. And so now I'm thinking, oh, this might be distribution to the downside. And next thing you know, whoa, okay, things are starting to look all right. Now you get, all of a sudden, you get a bearish fair value gap on the 1 minute. That's crazy. Hold on, man. Hold on, man. Let's make this precise. Let's hope the lag don't annoy us. And let's go with 1 minute. What they doing? What's up, trading view? Hold on. 1 minute. Bearish fair value gap, right? And then peep this. Let's change the color here. So we could distinguish it. Come on. We gonna put the lag not gonna stop us today, y'all. I'm gonna see y'all right now. We're not gonna let the lag stop us today. All right, so boom, that's the 1 minute. It just happened. So at this point, that becomes a point of interest. First of all, y'all see the yellow line here was my entry. Second of all, by the way, this phase 2 midline thing, we're largely watching the 5 minute time frame for that. So we're looking at 5 minute bodies. And so when I seen this happen, you can see why. That's one reason why I entered up here based on the phase 2. So this is why I'm trying to tell you, I combine strategies. I'm already knowing that we're going to reject. This is a point of interest. When you see something like this happen on this time frame, typically we're going to go down. All right, so this is not SMC. It has nothing to do with SMC. You'll never find it from any SMC creator, content creator. You'll never see this. You don't know what I'm talking about here, and it's okay. But my point is, I don't just trade SMC, but see the combination of the two strategies, which I do teach my mentees, is why I can get in plays a lot earlier than people who either trade SMC or trade whatever the heck. So that's for one. But either way, that's one reason why I went short. Now why I really went short up there besides phase 2, let's go back to SMC. I'm about to show y'all right now. If this thing doesn't keep lagging, I'm gonna show y'all right now. Hold on. All right. Jeez, man, my laptop feel like it's about to explode, bro. Now I got to do some cleanup of the memory on here, no cap, because this is getting out of hand. It's all the classes I do, and I got all the recordings and stuff. It's slowing my laptop down. I got to clean this thing up. All right, so look. If I'm noticing that we're in a 1 minute range and I see us pop out like this and then aggressively come back in like this, making it impossible for us to make a 1 minute bullish fair value gap. Because if we're leaving a range, I told y'all before that if you're leaving a range, you ideally want to leave the range with a fair value gap. So I see that we came above it, closed above it pretty strongly, and then destroyed that entire rally with this one red candle. I'm now thinking, okay, price is gonna move at least under these lows, at least. At least under those lows. So even if it was a scalp, I'm cool with entering here to scalp it to these lows at least, bro. Because at the end of the day, that's 40 points. From here to here, still 40 points on NASDAQ. On the minis, 40 times 20 at $800. Taking $800 on this little play. With one contract on minis. You know what I mean? So that's for one. Now let's go ahead and go here to the 15-second, and you can see why I would enter where I entered at. So now for me, when I see the fact that we left this range, like this is why I love this time frame. We left this range with this. We came back in hard with a strong city, right? I truthfully, I know where I entered actually. I entered on this red candle. And then I experienced a little bit of drawdown on these greens. And then eventually it went my way. But because the way that I enter is I typically enter on the creation of a fair value gap. So it takes me understanding signatures, price objectives, and a little bit of anticipation as to why I can enter how I enter. So let me quickly explain it. I don't even necessarily know why I'm doing this on this Zoom. This Zoom ain't really for that, but maybe I'm feeling very generous today. So this is my interest strategy that I made up for real. I got this strategy from nowhere but my brain. But the lag not trying to let us be great today. Jeez, bro. Okay, look. Still didn't stop it at the right one. Oh, Lord. Brother. Might not be able to show y'all how I want to, y'all. I think the computer's about to win this game. I'm trying to show y'all the entry strategy, bro. But I'll try to verbally describe it as this thing is moving like this. So let me try one more time. Hold up, one more time. Let's do this. All right, boom. All right, so like I'm entering kind of where you see that, right? During the expansion candle. In a fair value gap, there's 3 candles that you need, right? You need the first candle, you need the second one, which is you want to see expansion on, and you need the third one. So in an area where I'm expecting price to go bearish at, in an area we're expecting a shift in structure, a shift in sentiment, after seeing the fact that price did not bounce on the upper 50% of the bullish fair value gap, meaning that the bullish PD array just got invalidated. I'm only looking at the upper 50% of that bullish fair value gap. I don't care about the lower 50% in this scenario. So when I already seen the upper 50% in this scenario get invalidated, I'm already thinking we about to go down. And then especially with the size of this red candle as it's down, I'm like, bro, we're really about to go down pretty hard. That's why I'll enter where I enter that. You know, that is exactly where I enter that. And you know, you guys can see it right here. This is the same play. This is the same play. That's where I enter. You see the midline, phase 2 concept. You see my entry. Boom. Yeah, same play. This is exactly what happened. So y'all seen that. All right, so boom. So that's why I entered here. And then my stop loss at this moment is if we don't make a bearish reversal. And so this is such a big candle that I don't really need it to trade up to the, like, if price open up right here and trade it all the way up here, I don't even need that. If it even comes to like probably like the middle part, I'm like, never mind. Because typically when it expands like this, it ends up making, come on, I pressed the button, come on. Yeah, it ends up making like a pretty decent size fair value gap. So that's what I needed to see. Now, my stop loss is simply based on, will price hold this 15-second fair value gap? If price doesn't hold this, I'm on the wrong side. Because at this moment, typically that fair value gap that just formed does not get traded to. But even if it does, it should get respected. If it does, it should get respected. If it does not get respected, guess what? That means that I'm on the wrong side and we're about to make a higher high. So why the heck would I still hold this play past this fair value gap? Why would I still hold that play? What am I just hoping to hold it? We don't do that on this side. Nah, not over here. I don't care about no, oh, I haven't hit a 20% stop loss. None of that. I don't need it. If I'm trading options, it's the same logic, same technical analysis, same scenario. I'm doing the same thing. And on options, I will cut my play on options if that fair value gap got invalidated. I don't need to wait for myself to hit a 20% stop loss or whatever the heck. I'll take a 3% stop and be cool with it because I'm only in the trade based on this fair value gap from the 15-second time frame. All right, so now price does what I hate, it actually visited it. I was like, dang, why are you visiting it? But let's go ahead and measure the fair value gap here. Let's go ahead and measure the fair value gap here and notice what just happened. You see where price is respecting it, right? You see what part of the fair value gap is being respected. I don't even got to say too much. I don't even got to say too much, right? And then the rest becomes history. Now, so that's my entry. You see where I get in that. I got in here, experienced a little bit of drawdown at first before it ended up going my way, but what I needed to be respected got respected. So that's my personal entry. And now y'all can see first and foremost how it's a 4-hour area. I used a 15-minute for confirmation, and I still found my way to enter on the 15-second. So don't think that in a 4-hour order block, automatically I go to the 15-second. No. Like, hopefully, without explaining everything I just explained, hopefully you guys can see how I'm scaling into my time frame for my specific entry. And all of a sudden, I'm a part of a 4-hour move based on a 15-second stop loss. So my risk is based on a 15-second. My reward is based on a 4-hour play. Because let's not lose sight of the higher time frame. What did the higher time frame tell us we going? The higher time frame tells us we going all the way down here. So if we get in at 783 and our stop loss is at 607, we're in there for what? Like 170 something points. 176 points, right? Times that by 4 to get you the ticks. That's a heck of a lot of money that you can make based on getting in. You're risking a few points to make 170 something points. So hopefully I get the logic there. Now that's the 15-second view. If you're like, yo, I don't even have a 15-second on my chart, bro. Like, I'm scared of that, all that. I got you. Don't worry. Let me show you the 1 minute for a second and then I'm gonna move on. Jeez Louise. Let me show you the 1 second for the 1 minute. So boom, this is the 1 minute. The 1 minute finally give you a fair value gap right here. Now I don't like the size of it, but I still think it's interesting as a visual to show you this. When we're bearish PD arrays work. When we're bullish PD arrays work. A fair value gap is a PD array. PD array is pretty much synonymous for point of interest, okay? So I'm trying to talk to different people in the room, right? So if you heard of a point of interest, that's what I mean by PD array. So bearish points of interest work when we're bearish. Let's just keep that simple. So when you see this happen on the 1 minute, where, okay, we came, tapped the 50% of this 1 minute bearish fair value gap, and then, come on. Freaking lag, bro. But that, whenever it loads up, y'all gonna see, like, that ended up being, you know, the higher that move. This could have been your entry, and your stop loss could have been based on that fair value gap. You know, so literally a few points of a stop loss that ends up, you know, playing out to give you, like I said, a 4-hour reward. So if you're a 1 minute trader, you could have got in right there. I do the 15 seconds. So y'all seen I got in up here. Plus it's combined with the phase 2 concept. So, you know, I have so many confluences behind my plays that's why I'm very confident on the things that I enter on, and the times that I take losses, because guess what? I take losses like anybody else. I'm happy with my losses because, like, I could go in a courtroom and justify the heck out of my entries as well as my exits. And typically it's gonna work out, obviously. And so you guys can see once we got to the 4-hour lowest body, now you can see like the reaction we got. And then that was the low of the day, by the way. Like, price never went lower than here for the rest of the day. And how do I get out of my play? Same way I got in. All right, so boom. We touched the area, but we chop our way into this bearish fair value gap. Cool, I'm cool with that. As long as we hold in the lower half of this fair value gap, I'm still valid. So I'm not exiting yet. Then we make a lower low. So I'm happy. I'm like, oh, it's lit. Like, we going to hell. Like, it's over. Like, I want to make so much money. And then, hold on. This all of a sudden becomes very important. My stop loss is now looking at this. This is the one that matters to us, because if we're bearish, there's no reason for price to not respect that one, not right by this target like that. So when price comes up, disrespects it, usually on the other side, like, I already know I'm wrong. So this is where I exited my play. I'm like, all right, it's over. Party over, party done. You know, I'm taking profits and everything. So I didn't like take profits at the low. I'm still watching the 15-second to tell me, hey, are we turning back around? And when I see this is a true shift. This is a true shift. What just occurred here between the invalidation of this and the validation on the other side, like this is a shift in sentiment, and then so you can see what ends up happening. So yeah, it's like thank God I got out when I got out, because that was the low of the day. I understand, but yeah, man, it's like hopefully y'all got value from that. The lag tried to get us, y'all, but yeah, you have to pay for the somebody in the chat said trading doesn't go below the 1 minute charts for me. Yeah, you have to pay for that side of trading view. I believe that's the premium package, if I'm not mistaken. So yeah, and I suggest you wait for them to have like a big discount sale. Typically around like Black Friday, for example, they have a big discount. I know they have one for Memorial Day, I believe, or Independence Day, one of them, maybe both of them. But wait for TradingView sales, and then definitely take advantage of those seconds time frames. It's very helpful. I know I'm abusing this laptop. My charts do be on 24/7. Honestly, I needed, man, after this class, I'm gonna try to see what I can do with this laptop. But you said, can I show that on the 1 minute? What the exit? Yes, I will. As long as the lag don't kill us, the exit on the 1 minute look like it's gonna be the same concept too. And it's just a little higher up. So the 1 minute you'll be looking at this bearish fair value gap. But personally, and without saying in the chat, once again, my mentees know why we're not looking at this entire fair value gap. We already know we're wrong after price invalidates a very small section of it. And it goes back to that P word, mentees. Go back to that P word. Like if we not doing that, mentees, you know exactly where we're going. We don't even have to wait for the entire fair value to get invalidated to know we're wrong. So if I was using a 1 minute, I would have got out like, you know, somewhere around here. Somewhere around here, I got out of there, basically. So yeah. And they putting good information in the chat about trading views. So definitely check that out, everybody. Now, let's get into what's coming up this upcoming week. Man, I feel like that took longer than I wanted it to, though. I'm not gonna front. Let's see. I'm gonna try to finesse this class now. I don't want the class to be too long. I don't need any of this stuff no more. None of that. I mean, I don't really necessarily need this. I don't need this. I don't need that. I don't need that for real. I just need this. This is what my chart is about to look like. But I'll get back to NASDAQ. All right. I will get back to Nas. Now let's move this. Let's go here. Let's talk about this upcoming week, beautiful people. So this is the weather report. We like to do this because this tells us the best times to trade. We like to look at the economic calendar. Typically, price is not going to move until there's a news event to move it. Now, do we think that news determines direction? Absolutely not. We call it before it happens here. That's the slogan at BTSMC. We call it before it happens here. I have a question in the chat that says, do we use the same concepts for swing trades? 1,000,000,000%. I actually was just talking about that with my mentees this afternoon about how fire of swing traders we could be because of the fact that price is fractal. It is the same thing on every time frame. So 1,000,000,000%. Definitely use this for swing trades all the time, everything. So another question says, when using an economic calendar, should you only use the US and turn off all other news filters? If you're trading like NASDAQ and S&P, I personally think that, yeah, you just need to focus on US news. That's my opinion on it. I don't focus on anything else because I mainly stay on NASDAQ. So, but if you're trading like different Forex tickers, then yeah, you want to pay attention to their news events as well. Now, so when it comes to, you see Monday, there's nothing really to talk about. Tuesday, nothing too crazy. This week is like honestly uneventful. I don't have the highest expectations for it. I'm kind of leaning into next week, but you do have to watch out for GDP's second revision on Thursday. That's 8:30. You have to watch out for PCE because this is very important. So I'm really focused on Friday. I feel like Friday, and this is speculative, so take this with a grain of salt. I feel like Friday the market is gonna shock people in a way, like heading into September, like they're gonna like have a big something happen because it's the last day until September. Look, Monday is September 3rd. So let's talk about September for a second. Look what I typed in here on Google. It says, what is the most bearish month for the stock market historically? September is considered the worst performing month for stocks over the past 100 years, with an average loss of around 1%. This is known as the September effect and may be due to institutional investors, blah, 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 blah. So the point of matter is September is historically the worst month for the stock market. So that's why I say I wouldn't be surprised to see PCE on August 30th kind of set us up for a big like September drop or something like that. And I almost see it in the charts too. So I'm gonna go ahead and talk about that in a little bit. But so now y'all know Friday is important, Thursday is like decent, but the rest of the week I have low expectations on. I just think it's kind of the closing of August. So you know, I'm still on a conservative target type vibe. So that's that. Now let's go down here to DXY. All right, so DXY, y'all may remember this from a previous watch list. Everything is on recording and stuff. This is literally the arrow we drew. I don't erase my arrows. We said we wanted to see price come into here. I was looking for rejection right at the 50%. That's where my arrow stopped, right there where it did. Where do we get the rejection? At that exact spot, and then we traded down. I call this the weekly BTSMC target because I need to distinguish for you guys when I'm looking for a fair value gap to bounce price, or am I simply targeting it? In this scenario, I was just targeting it. That's why I write the word target. I didn't just leave it as a BTSMC because people might think, oh, Rel is expecting price to like come to the purple area and bounce. Like, no, not at all. Not at all. It's just an easy target for me because I know price tends to target them. All right, so that's what that was about. Now, DXY continued, which is perfectly fine. That's why, by the way, that's why you need to stop looking at every fair value gap as something that can bounce price or reject price. Remember the third word in fair value gap. The third word in fair value gap is gap. So being that it's a gap, sometimes fair value gaps just get filled. It's not always used for bouncing rejection. Just like your standard liquidity void or your standard gap. Your standard gap, I'm sure you guys have seen gaps be used as bounces or rejections. Gaps don't always get filled. How many times have y'all tried to fill a gap out and price rejects the gap? It's the same thing with fair value gaps. We've seen fair value gaps get bounced and rejected on, but sometimes they get filled like this. All right, so this is an example of one I expect to get filled because in context, we're not going to use this to go higher. Like, that's not talking about context. And that's, let me not even get into that, bro. Just know everything's about context. All right, so now we're at this point on DXY. I do expect continuation to the downside. First and foremost, I know we're currently doing it, but I was thinking, I think we're gonna like aggressively move under these lows. It's a pretty crucial time period for DXY because come on, man. All right, because you see this monthly bullish fair value gap here that we've been consolidating on for 45 years in a row. Like, this is the monthly chart, let's be clear. So this has been going on for quite some time. Seeing us make this type of candle, this is the first real expansion candle we've gotten in quite some time on the monthly chart. I feel like it's going to end up continuing. So I'm definitely watching this. I'm definitely watching this right now. We're definitely at a crucial point. We could bounce on the same monthly bullish fair value gap all over again. I know that it could happen, but I'm definitely watching to see if we're going to aggressively move under these lows as well as these lows. So crucial time for DXY. And sometimes I use like dollar pairs as a level of confluence. And so when I first enter, my watch list always starts the way that I started for y'all when I'm making it myself, right? Like when I was preparing for this, I go to economic calendar, I try to find out the best days, and I start with DXY. So when I started with DXY today, I was like, dang, DXY, like we got to the target. I don't know, we're kind of in a period. I got to see what it does at these lows. So then, but then when I started looking at Forex tickers, I was like, oh nah, these dollar pairs have more upside, which means that the dollar itself most likely has more downside. All right, so I'm gonna show you that in a second. Let me just do ZT because it's right next to it. Now this is the 2-year treasury note. It's still consolidating at the place we wanted it to. You guys anybody who's been with me have seen me accurately call this up and down from all the way the lows down here all the way to these highs. This is the monthly chart, and so this is here on the daily. Now we're still looking at this area. And why is this important? Because we use this for confluence with NASDAQ. But my Forex traders use the dollar with confluence for their trades, obviously. But yeah, here on the daily chart, we've called this accurately up and down. Every POY you see here that got respected, we called it out before it happened. If you're new here, all of them, every last one of them. And this is the bond market, so don't ever think that what we talk about doesn't apply to whatever market you trade. It applies to every market you trade. It's the same thing everywhere on every time frame. Anywho, we're still working with this weekly BTSMC. I'm looking at it on the daily chart. But this is a weekly fair value gap that we're still reacting to. It's just consolidating. So, we'll see what price wants to do. But I will say, as I told y'all, like my arrow shows, I do lean towards upside. Why? Anytime we're entering a valid point of interest and we're staggering there, to me, we're most likely going to use that point of interest. Because if it was a true reversal, we would have dropped off really hard after touching the target. The target was the blue area, right? We would have dropped off really hard. We wouldn't have staggered off like that. So to me, it just came back for this bullish fair value gap. We're probably going to use it to go higher. So I think the 2-year will end up going higher, first and foremost. But now let's go to the forex tickets for a second. Man, we gonna push through this lag, y'all. I just gotta make through this class with this freaking lag, bro. Y'all gotta be patient with me. So look, your JPY, this is something we're looking at. I'm gonna do forex pretty quickly, but we've been looking at this weekly SIBI. It's been holding price up. We wanted it to. It just hasn't given us much. Like, we got there, yes, but we pretty much consolidated. So what I'm watching here is the 4-hour, because the 4-hour is in consolidation. You see what I'm saying? So you just want to, I like the fact that we have a whole lot of sell side liquidity here, right? I love that. So what I want to see if we're going to move to the downside is I'm going to see a 4-hour bearish fair value gap under these lows. If we could get a 4-hour bearish fair value gap under these lows, then I like it making it to the weekly lows way below. All right, so a lot depends on how we leave this consolidation. You see that we're attempting to leave it right now, right? You see what's going on. So that's what I'm looking for. If we pretty much wick under the consolidation and come back up into the range, then you might see a run on these highs. So a lot depends on pretty much what happens, very soon. But no matter what, I just say don't trade inside the range, trade outside of the range, as always. That's for all time frames. All right, now, gosh, nah, the lag is fake, homie, though. I'm not gonna front, y'all. Trying to push through it, but the lag really starts to get to me. After a while, I feel like being like, yo, man, I'm gonna catch y'all another time. That's what you feel like doing, bro. It made me feel like I'm gonna catch y'all, but I got some fire to talk about, so I can't even do that. I don't know what I could do about that, though. I don't know. Page unresponsive and all that. They doing me foul. There's too much memory. All these classes I done recorded. I didn't put too much memory on the laptop. I gotta do a big sweep. So here, all right, Euro USD. Once again, if you trade, whether you trade forex or not, I still think there's value in checking this stuff out because of the lessons you could get. And remember, every market is the same. So peep, Euro USD, we were looking at this weekly BTSMC to send price to the upside. Obviously, it ended up working out. Now, you see that we're making a nice push. I want to see a bullish fair value gap exist over these highs. So whatever downside comes early this week, I need it to be minimal because I want to make a fair value gap right away on this weekly chart, as there's some highs here to the left that I think we want to take. And I think when we take those, we're going to keep moving higher. But ultimately, just know I'm bullish on it. I kind of want to say a little more, but I'm trying to be minimal with how much I click on this screen right now. But I'm bullish on them. This play here on British pound. We've been sniping the heck out of this. This is a weekly order block. Let's be clear. Order block people from yesterday. Do y'all see it? Do y'all see it? Weekly order block right here. We also technically just made another one right here. All right, so we'll see how price wants to react with that if we do trade to the downside. But yeah, yep, y'all see what's going on. This is another one that played out, and y'all see what happened here. I don't, you know what I mean? Trying to say without saying it. So words. So there we go. Now we pushing. And I'm expecting continuation once again because of the dollar. I'm expecting continuation to the upside. So we're looking for the same things. We want to see a bullish fair value gap occur right now. I would love to see that on the weekly chart. I would like to check out the daily and stuff, but I can't even go there. I did not mean to click on New Zealand dollar. No, I wasn't a fan of anything there. I wanted to show y'all CAD. I think there's a good point I can make about USD CAD that we all can learn from. So as you see here with these words, right, the sweep happened because let's go to the daily chart, and you guys may remember this from previous watch lists. Hopefully somebody remembers when I was talking about like, yo, look how CAD has been consolidated on this very valid order block. Man, order block masterclass people. Enough said. Order block masterclass people. Enough said. So y'all see that we finally popped out of it, but look at the manner in which we popped out of it. Look at the manner in which we popped out of it, man. Very staggered, very ugly, not the best price move. Like, I know if you look at the colors, you could say, yo, Rel, what you mean? It's a big green move that allowed us to take this liquidity, right? This liquidity which was what the target was. As I told y'all, after this order block, I think we're gonna run the yellow line. You've seen what price did, but I didn't like the way that we got there. And I'm trying to tell everybody that you have to look at, you gotta like look at the delivery. All right, you gotta look at the delivery. So when you're looking at the fact that we're not really making fair value gaps on the way there, there is a small one in the middle here, but ultimately it's pretty wicky. You should be wary of moves that look like that. So let's look at the 4-hour version of it. Look at the 4-hour. You see what I'm talking about? It's not a clean move, y'all. Don't ever look at just because it was green on the daily, don't mean it was a clean move. And so that's why I said on the watch list on that Sunday, as you can see, this is Sunday. On this watch list, I said, I believe we're gonna make it to our yellow destination, yellow target, but I think we're gonna sweep. And I think when we sweep, we're gonna come down pretty hard. All right, look what happened. See, we swept and we came down pretty hard. This first fair value gap, I don't even like the fact that it was visited, but you see that price respected that first fair value gap right at the 50% of it, right? And respected that. And why do we respect the bearish fair value gap? Because we're bearish, right? We respected the bearish fair value gap because we're bearish. Exactly. And so boom. So boom. Now we dropping off. And yeah, so my fault. I just wanted to basically show you guys this, which is the fact that you can anticipate this being a sweep based on the way that we enter that buy side liquidity. So if you notice that we're entering buy side liquidity with a staggered move, don't be surprised if we just run it really quickly. In other words, we sweep it really quickly just to come down and take this whole section. So now when you look at it, it actually looks like what we talked about, accumulation. This looks like manipulation before distribution, don't it? And being that I expect the dollar to drop even lower, I expect us to move even lower on USD CAD because the USD side is the first word. So if the dollar is going down, then this ticker should go down. So I'm expecting even further drops. But this was a good visual to show y'all, like, why did I anticipate a sweep? Because of the delivery on the way to buy side liquidity. It's a telltale sign. You know what I mean? And then whatever happened, they're gonna blame it on the news. I don't know what news is coming out that's making all that happen. They're gonna blame it on the news. But we call it before it happened. Hey, you know how that go. So anywho, USD CHF. This is another reason why I think the dollar is going lower. Once again, I told you when I first came my chart, I was like, dang, the dollar is at a critical position. What will it do? When I looked across my forex tickets, I'm like, I think the dollar is going lower. Because this is another thing. We were looking at this SIBI on the weekly. This SIBI is supposed to take us not just past these lows, which I believe is going to take us past the initial lows, yes. But I think it's going to end up taking us past these lows, right? These like double bottom lows, basically. So I'm expecting more downside. And it's largely when I've seen this, I was like, yeah. Because I've seen this setup happen so often that I'd be very surprised to see us not like move much lower, you know what I'm saying? So plus when I looked at I believe the daily chart, I was liking what I was seeing for more downside. I think that's the last forex ticket too. Yeah, I like the fact that we have rejected here and we made a SIBI. The SIBI looks like it might not get revisited. If it does get revisited, we need to respect it though. So if price does trade up to it, it needs to be respected. Otherwise, I wouldn't really like this trade idea no more. So as long as that SIBI in the middle here is respected, then I like more downside on USD CHF. Now I think we're just gonna drop regardless. But if we happen to come up, this needs to be respected. Otherwise, it's gonna end up running these highs. All right. Oh, I guess there was one more. And you know, same thing, literally the same setup. We've been looking at the same fair value gap across multiple tickers, and it is delivering. And so I'm just expecting continuation to the downside. And so all these tickers look like bearish to me. I know that when we're bearish PD rays get respected. So seeing these bearish weekly PD rays be respected, I'm targeting weekly lows, right? I'm talking weekly lows, and under these lows, there's more liquidity. So I wouldn't be surprised to see us keep dropping. So that's the logic. Bitcoin, I don't really have nothing new to say about Bitcoin. We're just consolidating in that range still. I will say this every week, bro. As long as the bodies are holding its weekly fair value gap. Which bodies? We talked about this earlier. Which bodies? Weekly bodies, right? Okay, cool. As long as weekly bodies are holding a weekly fair value gap, then I can't be bearish on it. Until weekly bodies close under it, that's when I would get bearish on it. Right now, it's in a range. We'll see what happens next. All right, same thing with Ethereum. Now let's go back to NASDAQ. Trying to push through the lag. Let's go back to NASDAQ. Oh, man. All right. NQ. NQ, NQ, NQ. NQ, NQ, NQ. Jeez, man. Jeez. All right, so on NASDAQ, if you look at the weekly chart right here, we engineered liquidity here, which means we basically sold this as a support level. It looks like a support level, right? Because there's strong support at the, you know, whatever level, that 17,341 area. All right, so now I believe that we're going to take those lows, just not yet. Just not yet. I don't think price ready to take those yet. But I would not be surprised to see in September us take those lows. This is very speculative right now, and it's a very bold statement to make because we're in a bull market. Why am I anticipating that we're going to take these lows? I don't think this happened for no reason. When I look at ES as well, I hope this lag doesn't kill me as I go here. I don't like the bottom that ES made here. It's very sus to me because this bottom, when I look at it, it's not really rejecting off of anything that I like. Like, it's not like it came into a fair value gap or it came into like an order block, and like this bottom here is very sus. And then this long wick is an imbalance in itself. So I just feel like the lows are very sus to me. Now, I guess while I'm here, I'll talk about ES for a second. I think ES is going to run all-time highs. I'm just saying that I don't think it's going to move much higher before coming back down. I think that we're going to end up coming back into this range for real. I don't think it's done. I think that there may be, once again, this is speculation, there may be an SMT divergence that occurs between ES and NASDAQ, to where if you notice ES right now, we're really close to all-time highs. I'm going to try to go to the daily chart real quick. Hopefully it doesn't do too much. All right, this is the PD array that I was telling us to look at in the chat. This was the important one. We were looking at this one and this one. I said if price uses the top one, that shows a lot of strength. That means price is spooling, right? And you see, what did price do? Use the top one, and we're pushing up. We're clearly ranging. I told y'all this is that September, this is that August vibe. We're clearly ranging, but I do think we're gonna end up breaking to the upside to run all-time highs before anything else. And notice that we're really close to those all-time highs. But let's go to NASDAQ. On a NASDAQ daily chart, NASDAQ's a little farther from their all-time highs, as you can see, right? It's a little farther from it. But there is this SIBI here. That's why this is my target on NASDAQ. Then I want to see what happens next. I think NASDAQ will get up here, but I wouldn't be surprised to see NASDAQ top out here while ES made an all-time high. And that will be a divergence where one ran all-time highs and the other one did not run all-time highs. That's usually a sign that something's about to change over. And so I wouldn't be surprised to see NASDAQ be weak while S&P remains strong at first before potentially a drop off. This is super speculative. I'm not making plays based on, I'm not taking puts when we come here, nothing. I would only take this play if we got real confirmation. This is just me looking ahead of time and me thinking about, like, oftentimes I don't see us engineer liquidity for no reason. especially when I look at the way that ES bottomed. So I'm basically thinking of different bearish setups that I've seen. Like usually when they engineer, I would see price come up to a deep premium before dropping off. Right, I've seen that happen a million times. So I wouldn't be surprised to see it happen this time. Usually when they engineer like this, I see a SMT divergence, which is once again ES making a higher high, NASDAQ making a, you know, a lower high, stuff like that. So those are setups I'm looking at. Now, if it doesn't happen and we just simply keep pushing up, then ride the uptrend. What the heck? And how do you know whether it's going to do that? We just went over before we got into like the watch list for real, that we go through confirmation time frames. And so it's always about confirmation. So if price were to, let's say price comes to this BTSMC right now, you know, I'm just hopping in calls. I'm just hopping in buys. No, it's a daily BTSMC. I'm gonna use the hourly for confirmation. And I'm gonna find my way into my entry, which is gonna end up being on the 15-second. Y'all know I got my ways of getting into my true entry. But the point of the matter is I'm not just entering plays just because we in a POI. Don't ever do that. I think that you take a lot of losses doing that. So the important places on the chart right now, if you want to talk about important places, it's this SIBI on the daily. We need to see what price does here. This BTSMC, we need to see what price does here. Because I think over this, we'll go to all-time highs. I think under this, I believe we see these lows. You know what I'm saying? So for me, largely, it's about these areas. Because under here, I know there's another BTSMC right here, right? This BTSMC right here. I personally do not think that BTSMC is relevant. This is one of the fair value gaps that I would tell you to ignore. I could eat my words. I could be wrong. Of course, anybody could be wrong. But I'm just telling you, I don't think that fair value gap is relevant at all. The only one that's relevant is the one that's right next to us right now. And that's it. I'm talking about for bullishness. All right, so that's my plan for the week regarding NASDAQ. I'm watching NASDAQ in those areas. It'll tell me a lot. Now let's move on to the Dow. It's not like a bunch of options tickets I'm doing either. I'm doing indices right now, especially with the lag. So we're not far from being done. Don't worry. Y'all don't gotta be patient for that much longer with this lag. We almost done. I promise. Cause this joint is annoying me. It's funny though, it's like I ain't have this lag when I was charting earlier. You feel me? Like it's the zoom part of it. When I add zoom to the mix, it starts killing it. So when I'm by myself, I don't have this lag. But zoom be doing this. So all right. On the Dow Jones, man. On the Dow Jones. Now this thing is stuck. All right, so on the Dow, what do we have on the Dow? I'm trying to remember. On the Dow, I believe I have us going a little higher with everybody else, but the Dow, if you look at the Dow's weekly chart, it also engineered lows. We targeted the lowest body on the weekly when it comes to the Dow Jones, which is what you see right here. See this yellow line? We had targeted this. I keep telling you about the lowest body, man. It's a great target for yourself. We hit it to the tick and we ran higher. But at the end of the day, when you zoom out and you look at it, we have a huge liquidity pool right here. And I don't think price is going to lead that. So same vibe. I wouldn't be surprised to see us run these highs and come back in hard to take everything. Now, it's such a bold prediction that I'm not trying to live and die on that. But if it happens, don't be shocked. Is what I'll tell you. No matter what, we're going to always have to go with confirmation. So the Dow Jones, initially, it's very likely that they're gonna run the initial highs right here. But I think if they run this, they should go to all-time highs next. I'm gonna skip the Russell. I might even skip the Nikkei, because I can't do this lag no more. I'm trying to think what else I really like to talk about. I'm gonna skip the rest of the Nikkei for now. And then what's next? I think CL is supposed to be next. And then SPY and QQQ, and then that's it. I think I got it. Because for gold, what was I thinking about gold? I feel like for gold, I was gonna tell y'all. Let me check. Yeah, my thing is going crazy, bro. Let me check on my phone. I trading with my phone. I'll tell y'all what I got for gold for people who are interested in gold. Oh yeah, gold. There's a bullish order block on gold that we're reacting to right now, and that bullish OB on gold, y'all, is from the daily chart. The daily chart of gold from August 14th, Wednesday, August 14th. If you highlight that candle, That's a bullish OB. And masterclass people, y'all can see where we reacted at too, by the way, on the daily chart. So based on the fact that we're reacting well to that bullish OB, I'm expecting gold to make another high, right? What's the goal of an order block? To get you to the previous highs. So gold, I'll look for it to go to the previous highs that we got to, and then we'll take it from there. So a low hanging fruit objective from gold is to run the previous highs. All right, so I'm still bullish on gold. Let's see if I could show that here. Yeah, I'm talking about this the visual. Yeah, I heard the words already, but this the visual. This the bullish OB. I'm expecting us to simply run these highs. We're all-time highs on gold, so you have to use conservative targets. Yeah, I know I'm good at getting all-time high targets as well, but I didn't do that for gold. So right now, I would just tell you the low-hanging fruit objective is these highs. CL I'm bullish on. CL I'm bullish on. I'll start talking about it verbally. If it come up, it come up. CL I'm bullish on, and that is if you go to the lowest body on the daily chart, which is at 71.78, right, on the daily chart. Yeah, I noticed that we targeted the lowest body. We hit that, and after that, we made a bullish fair value gap. And this is it on my screen right now. So after we hit the lowest body on the daily, we made a bullish fair value gap. If this holds, then I would target these highs. All right, so if we indeed make a bullish fair value gap right here, then CL should make its way to about $79. So I'm expecting more upside on them. I'm already kind of expecting more upside on them, but I would say you can be really convinced if, once again, we make this bullish fair value gap. And then, of course, if we make it, y'all, just make sure it gets respected. So any retracement into it, it needs to be respected. If we somehow come under it and bodies close under it, then trade idea is over. It's not looking bullish. It's bad. But I did tell y'all that I don't like CL in general in this time period, as it's on a higher time frame seek and destroy condition. It's on a higher time frame range, and we don't really like to trade ranges, y'all. You know what I'm saying? Not on the inside. So when you look at the weekly, the bullish and bearish delivery on the weekly is not favorable. And so I would just always say treat this with a grain of salt. You know what I'm saying? I think we have a nice little daily target we could get to right now, but I'm not really interested in it myself. And for SPY, I had it making an all-time high. I would make it an all-time high. Now I know it looks obvious from here, but once again, y'all know I'm kind of anticipating not really too much movement over these highs. I really feel like, just like I said for USD CAD, bro. Just like I said for USD CAD. Remember, I showed y'all how I anticipated the sweep, and y'all see what happened. I'm kind of thinking the same thing on the indices, that it's just coming up to go a little bit above it, and I think we're gonna make a big move back into this range. But this is like so speculative, bro, that I almost don't want to say it out loud. I need to see what we looking like. I need to see, are we making fair value gaps on the way there? I need to see the energy in the market at the time before I can start, making that prediction. But I will tell you that I am very suspect on continued upside in the intermediate term. I'm very suspect on continued upside. And so, SPY, you see that it uses BTSMC. You see everything's respecting this BTSMC, right? Okay, this BTSMC is supposed to take us over those highs. That's why. So I would take SPY over those highs next. And QQQ has the same setup as NQ, which is expected. But for me on QQQ, I'm looking at this gap. So remember how I told you I can see a divergence happening where the S&P 500 on the futures chart runs all-time highs, but the NASDAQ doesn't quite get to all-time highs. SPY, I already showed you SPY, I'm expecting all-time highs, but for QQQ, I wouldn't be surprised to just come to this gap and reject this gap. So, I would target this gap for now, but let's see if it's going to fill out. I think if it fills out and it continues higher, then of course you could target all-time highs. Because once again, I'm in a speculative mode entering into September. It's like a gut feeling for real based on the way that the chart is moving. Now, if we just keep pushing, y'all, I'm cool with that. And I promise you, I'm going to make money regardless. I promise you. If we just keep pushing, I'll make money regardless. But I don't also like to get caught off guard. So I can see a potential setup of price not moving much higher before coming back in to this range that we just made on a daily chart and on a weekly chart. And last but not least, I was going to show IWM. This is the last ticker I was going to show, IWM. You can see that here. Look how beautifully the bodies And mentees, y'all can see this the P word that occurred here on the monthly chart. Mentees, y'all see what's going on. Now, anyways, look how the bodies on the monthly chart respected this monthly fair value gap. You see it? That's not a coincidence. All right, but the thing is, the move we made out of there is very, very nasty. Right? It's not really a pretty move. And then look at this monthly candle. By the way, the NASDAQ, another reason why I'm anticipating what I'm anticipating, I forgot to say this part. For NASDAQ and S&P, if you look at their monthly chart, which I'm not going to go to right now, if you look at their monthly charts, the wick looks just like this. That, my friends, is an imbalance. The market does not like to leave these type of wicks in the market. I'm gonna say that right now. So that's another reason why I could see price in September coming back in to address the wick that we're leaving in August. That's another reason why I can see that, by the way. So, and it's kind of the same thing here with IWM. So IWM, I think we will get to the monthly highest body at 230. So I still think there's like $10 more left in this move to the upside. Will we get to the second target? I don't know, but it's a target. And then ultimately you have all-time highs. So I'm gonna see what price does once we get to here. You know, if I start to see a sharp, you know, reversal and price starts making daily bearish fair value gaps and stuff, then y'all know what's up. We're gonna get the downside targets and I'm gonna update the chat and all of that. But if we just keep pushing, guess what we're gonna do? We're gonna ride the uptrend. So how do you know whether we're in an uptrend or downtrend still? That's my last point. You have to watch the PD arrays that are being respected versus disrespected. If you're expecting more upside and you're seeing that we're respecting bullish PD arrays, like a bullish fair value gap, bullish order blocks, if they're still being respected, you're still bullish. But if all of a sudden your bullish PD arrays are being disrespected, guess what? You're probably on the wrong side of the market and you need to view what is being respected. All of a sudden, when you open your eyes up, you're gonna realize, dang, my bullish order block got disrespected, but that bearish fair value gap got respected. Oh, and that bearish order block got respected too. That, yeah, pay attention. You got to pay attention to both sides of the market. So then you got to start finding the downside targets in that type of scenario. You know what I'm saying? So just pay attention no matter what. So sorry I had to fight through the lag with me on this watch list, but you know, that's all we had. If you watch this on YouTube, the free community link is in the description right now. And so are some affiliate links that I have with MyFundedFutures, Apex. You got discounts on Apex as well as TakeProfitTrader. So they're all in the description of this video right now. Make sure you subscribe to the channel. Make sure you follow me on Instagram. Everything is in the description of this video. So that being said, that is all she wrote.